Hi traders, hope you're doing well. Welcome to my video on the stop in volume trading strategy. In this video, I'm going to show you a simple strategy which you can use to capture moves like this for almost 600 pips. Okay, so you just need the standard volumes indicator. I'm using the MT4 MetaTrader 4 platform. You can use any trading platform, any trading instrument, so Forex, stocks, cryptos, commodities, indices, etc., and any chart time frame. I like to use the 1 hour, 4 hour, daily, weekly, monthly chart simply because they contain more price data, and therefore I find signals tend to be more reliable. That applies not only to technical analysis, but price action analysis, candlestick patterns, trend lines, support resistance, so on and so forth. Okay, here we have a pound dollar 1 hour chart. What we're looking for, stopping volume, is we're looking for the volume to increase in line with the overall trend. Okay. So first things first is we have to identify a trend in market. So you can see you have your support here and the market is making higher lows here. So what does that tell us? We're in an uptrend. Okay. So we're going to look to buy. We're not going to sell against the tide. We're going to trade with the trend. I'm not sure why we would trade against it. Each to their own, but traders are known to try and scalp a few pips on the 1 minute and 5 minute charts all day long with poor risk to reward ratios when they can capture big moves like this one for hundreds of pips, but each to their own. So we establish trend direction, and then what we're going to look for is a pullback. Okay, and to be honest, I'll just zoom back out. To be honest, you can just use your eyes to spot the pullbacks like that. Okay, uptrend, pullback, breakout of resistance, potential entry there, pullback here. Okay, potential, so pullback, potential breakout trade there, pullback, breakout, resistance comes support, continuation, pullback, breakout. Okay, we can pick these all day long, pullback, breakout. Okay, pullback, breakout. Obviously, you don't want to buy too high, you don't want to buy at the high. You don't want to sell at the low, but there's just ample opportunities to enter on pullbacks here. Now, where does the volumes, stop in volume strategy come into play here? You see how we were finding those pullbacks? If you look at the volumes indicator, okay, when it increases, okay, is when there's an increase in volume, okay, and when it decreases, there's a decrease in volume. So what we look for is a trend and a decrease in volume. So around here, you can see how low the volume is here, following on from a big volume, then it decreases, and that's the pullback there. So in this instance, okay, you can draw your resistance if it's an uptrend or support if it's a downtrend, and then just trade on the breakout. That's one way to trade it. Okay. Whenever it's low, you look for your resistance. So it's low here. You can look for your resistance in here, and you could have traded a breakout of that resistance there. Probably should zoom in for you. Okay. So it was low here. We can draw resistance. You can trade out. And interestingly, that resistance then becomes support. Again, it's low here. Okay. Then we can draw resistance and trade a breakout there as the volume increases again. It's low here. Draw your resistance, breakout. Okay. It's low here. Draw your resistance, breakout. Low here, draw your resistance, breakout, so on and so forth. Okay. Even back to here when it was low down here. Okay, we knew we were in this uptrend, so we could have just traded that resistance, big breakout candle, no coincidence. And in fact, that resistance then comes support. No coincidences there. Some traders would wait for the price to pull back and touch this resistance line to see if it actually holds up as support. And then you get a nice 3 inside up candle confirmation there. You could even trade the breakout of the pullback. Just to try and avoid a fake out. Problem with that is price won't always come back and touch this line. It will just continue moving up, like in this instance. Well, I actually came back and touched there, but here you can see it's just a clean breakout and continued. But there will be times when it will come back and touch the line. Just can give you that extra confirmation. Another way to trade the stop in volume as well is some traders would just jump straight in as soon as it starts increasing. Okay, so when it goes low, obviously we're drawing the resistance here and waiting for a breakout, but some traders might just wait for consecutive higher values of volume and then enter. Okay. Often it will coincide with the breakout, but there are instances where it won't, like say down here, for example. Okay, you can see we had this pullback and then price did form this level of support here. And then interesting, if you look at the volumes, you see how it started to increase. The volume started to increase within this pullback. So some traders may have entered even earlier there. Here as well, when it's low, it starts to increase in value. Some traders may have jumped in around here, but I prefer to wait for a breakout of the resistance or support level in a downtrend. Okay, so if we just find a downtrend like this one, market's making lower highs, clear, strong resistance up here. Okay, this level of support goes back to here, but this level of support holding up quite well, very well in fact. See, support, 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 support. And then once it's breached, there's a big drop. Okay. People are selling who were in earlier. Whoever tried to buy at the top is probably panicking and they got FOMO. Now they're just cutting their losses short and price begins to fall. Okay. We could trade a breakout of that support line there if you want. Triple top formation, breakout below. 3 inside down candlestick pattern there. Okay, lots of bearish signals. Where does the volume come into play? Well, we can see again, we have this big spike in the volume. As it drops here, okay, that's when our pullback is. We just look at the chart, don't we? Draw in a pullback, draw our support level, nice M pattern formation and a breakout again to the downside. Or you could have done the other more aggressive entry, which is as volume starts increasing, you could have looked to have sold around here. But yeah, I would have waited probably for the lower highs here and then the breakout of the support and all of this bearish price action. Stop loss just above recent high for a downtrend. So if we took this breakout, stop loss above this high or above this high, so between 15 and 20 pips. And then if we zoom out, see this is a nice big trend trade for over 450 pips. Okay, we could have used a break even as price fell down, just lock in the trade at break even and then use a trailing stop above the recent highs to lock in profit all the way down. Okay, you can close part of the position if you want, or on the way down a quarter or a half and let the rest run. What I wouldn't do is I wouldn't want to panic and see price drop here and just take 100 pips, which is still a good trade, obviously, but just leaving way too much on the table. You can, of course, re-enter if you do that on this this ledge here, but the more you re-enter, the more chance you have of getting a trade wrong. Okay, make sure you've got good discipline, so don't let negative emotions like fear, anger, and greed cloud your trading judgment. As I said, we're trading in line with the trend. The trend is your friend. And capture moves for hundreds of pips. I don't use a fixed take profit. I don't see why we'd exit trades possibly early, because let's just say you got a 20 pip stop loss, you have 4 losses, you're down 80 pips, not including spreads, commissions from your broker. You're down at least 80 pips, and then your next trade is a take profit of, I don't know, let's just say 100 pips for argument's sake. You're up 20 pips. If you took 5 losses for 20 pips and you were down 100 pips, but then you caught a move like this for over 400 pips, you're up 300 pips. Okay, it's just shows the importance of money management. Too many traders, I think, are trying to trace the perfect entry, the perfect unicorn crystal ball indicator that will give you the correct entry 100% of the time. It just doesn't exist. Okay, but with a decent entry in line with the trend on the higher chart timeframes, where I find that a lot of noise is filtered out, trading smart and trading hard, you can create a good trading strategy, but you will need, of course, discipline as well. Hopefully you found something useful in this video. If you can like and subscribe, that would be great. And I hope to catch you on the next one. Take care.